Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.
In this lesson, we will examine dependent care benefits and how they impact a taxpayer with respect to the child and dependent care credit. Dependent care benefits include amounts paid by an employer for the care of a qualifying person while the taxpayer works. The fair market value of care in a daycare facility provided or sponsored by an employer, and pre-tax contributions made by the taxpayer under a dependent care flexible spending arrangement. Special rules apply to taxpayers who receive such benefits. Taxpayers in these situations should not use Form 1040-EZ and must complete Part 3 of Form 2441. If an employer provides an employee with dependent care benefits under a qualified plan, the employee taxpayer may be able to exclude those benefits from his or her income. If a taxpayer is self-employed and receives benefits from a qualifying dependent care benefit plan, he or she is treated as both employer and employee. In such a situation, the taxpayer would not get an exclusion from wages, but would get a deduction on Form 1040, Schedule C, line 14, Schedule E, line 19 or 28, or Schedule F, line 15. To claim this deduction, the taxpayer must use Form 2441. The amount that a taxpayer can deduct or exclude is limited to the smallest of the following 5 amounts: the total amount of dependent care received by the taxpayer during the year, the total amount of qualified expenses the taxpayer incurred during the year, the amount of the taxpayer's earned income, the amount of the taxpayer's spouse's earned income, or $5,000. In the case of a married couple filing separately, the final amount of $5,000 is reduced to $2,500. When figuring earned income for the exclusion or deduction, the definition of earned income changes in 2 ways. First, earned income for the exclusion or deduction does not include any dependent care benefits received by the taxpayer. Second, the taxpayer can elect to include non-taxable combat pay in earned income for the exclusion or deduction, even if he or she chooses not to include it in earned income for the child and dependent care expenses credit or the earned income credit. Let's take a look at review question number 5. True or false? A person can choose to include non-taxable combat pay in earned income when calculating the credit for child and dependent care expenses, even if the person chooses not to include the pay in earned income for the earned income credit. The answer is true. Non-taxable combat pay may be included as earned income for the purposes of calculating a child and dependent care credit, even if it's not included as earned income for the earned income credit.
Like what you see? Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.